Spanish bond yields are up slightly this morning on reports that the ECB is encouraging that losses should be forced on Spanish bank bondholders. China's premier said over the weekend that the government will step up its efforts to boost its economy. I'm Lindsay Bell, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Lindsay Bell with The Street, and together we bring you the Morning Call Express. On Friday, the stock market popped up almost 2% after 6 down days. What's this mean for the summer trading season?
Well, we've had a few different patterns as the summer developed. Recently, we've been following this intermediate uptrend. We've been following this ascending channel. And every time it looks like it's going to change, it remains intact. So it's been better to actually switch gears at these spots versus pressing. And if you look at the chart here of the SPX, you will see, ever since we put the low in back in late May, we've had a series of higher lows. Here's a low, higher low, higher low. Every time it seemed as if we were going to break this trend line, we held it. Last Thursday, we went below it briefly. Anybody that pressed got a bit hurt. Anyone that covered their shorts after, like you said, a 6-day down move, it made sense. And then all of a sudden Friday, some good news out of the banks, explosion here. That's what goes on in the summer trading.
That's pretty interesting too, because China, their indices are at a 3-year low, yet our market's pretty resilient.
Market's been very resilient, and any type of bear out there with a thesis would probably think we would be at new lows already. With the news flow out of Europe, with the Chinese indices at 3-year lows, with a hard landing basically being just pounded out there, you would think that we would have come in more, but we're not. So just keep following stock prices, keep following the action versus the headlines, because sometimes that could frustrate you if you're thinking or overthinking it, especially during the summer.
You mentioned the banks were strong on Friday thanks to JP Morgan. They had a great earnings report. Fundamentals were good, and we got a lot more clarity on that trading loss. What are you seeing in the stock here, though? Is it buyable at this point?
I think anyone that came in and bought in this lower end of the range, they already have their existing position. Now the question is, kind of get back into that gap according to this chart, from the news flow. Here's when the news finally came out. Here is your bottoming process. This was the day that they finally came out and said it's going to be like 4.2 billion. That was your buy the dead bottom. Here is where you could have bought with a little bit of commitment to that bottom. And now we're hovering below this trend line. We're hovering below the 200-day, hovering below this trend line from the gap. So I would say it has some freedom to go to about 37. Then at 37, that's going to be a big gauge for the market, whether or not it could power into this gap and stay in it, or it gets rejected for a continuation of this lower level pattern.
Wells Fargo also had a great report on the banks on Friday, but they're also, I think, reaching some levels of resistance that we should watch.
This stock, in my opinion, will be the first major bank to make new highs this year. It's been out of the news flow. It's been acting very well. No big problems here. You look at the chart, it's near highs, above the moving averages, near this area. Investors didn't have any of the pain that they had in some other banks. I think Wells Fargo is people are just building a lot of confidence here that can continue.
Yeah, definitely good news for the housing market. The retail sector has also been doing pretty well. We saw Walmart, they've been reaching new highs, but also Target. You had an option strategy on this. They've been doing really well.
Walmart was my retail stock of the year. It's at new highs after a decade-long base. You look at the chart here, you can be a stock picker and time. Look at Walmart. Wow, 73, well into my target range. We started talking about Target the last 2 weeks. Another tradable pattern. This is why you can maneuver. This is how you use patterns to your advantage in this descending channel. Right here is when we said you should be initiating. This is when I was on Bloomberg saying, I like the pattern here. Let's do a call spread. It paid over 100%. And if you're owning the stock and you have that kind of risk, you did very well. Very, very powerful move there.
How about Apple? They report earnings next week. On Friday, they were able to hold above 605, but it could be a little choppy in the earnings. So what levels do you watch?
Well, it just came back and retested that last breakout area. If you remember, 590 was a big buyable zone a few weeks back. Came back on the pullback to test it. You look right here at the chart, you will see, this was your breakout above 590, hit resistance at 620, came back, was buyable there. Now you have this inside range, and I don't think it's going to make new highs until we get that earnings report. And hopefully they're a little bit more optimistic and they don't just guide lower like they usually do.
Yeah, hopefully we'll look for that optimistic report. Well, we're going to get into all of this and more in the long form version, so stay tuned for that.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. fill in your name and email address, and I'll see you on the other side.